Bitcoin's price has plunged sharply today, falling 5.7% and dropping below $60,000 for the first time since November 2024. This dramatic shift has sent shockwaves through the entire cryptocurrency market, erasing nearly $467.6 billion in value over the past week. Here's a comprehensive breakdown of this unfolding crisis. Looking ahead, the cryptocurrency market stands at a pivotal juncture, with analysts divided on Bitcoin's potential trajectory. Recently, Bitcoin's price has fluctuated around the critical $60,000 mark, prompting varying interpretations among investors. This price point is significant as it has historically acted as both a psychological barrier and a technical support level. In a bullish scenario, sustained trading above this threshold may entice many to view recent price dips as a prime buying opportunity, potentially leading to market stabilization. Conversely, a bearish outlook looms if economic indicators remain lackluster, particularly with inflation rates and interest rates affecting overall market sentiment. Geopolitical tensions, such as conflicts in Eastern Europe and trade disputes, could undermine investor confidence and trigger further declines in market value. The upcoming U.S. Clarity Act deadline is another significant factor, as its provisions could reshape the regulatory landscape for cryptocurrencies. This act aims to provide a clearer framework for taxation and compliance requirements, which could either bolster the legitimacy of digital assets or stifle innovation through stringent regulations. Investors are particularly attentive to institutional behavior. For instance, while MicroStrategy has recently added 430 BTC to its holdings, Metaplanet has made headlines with an even bolder acquisition of 775 BTC, signaling a competitive landscape among institutional investors vying for dominance in this space. The Fear and Greed Index currently sits at an elevated 63, highlighting the market's inherent volatility and fragility. This measurement indicates that while there is optimism, the underlying risks are palpable. The critical question for investors is whether Bitcoin can maintain its support level at $60,000 amidst these ongoing challenges. As we move forward, the interplay of regulatory developments, institutional investment trends, and broader economic conditions will be crucial in determining Bitcoin's resilience. The outcome of these factors will shape the future of the entire cryptocurrency market in the coming months and could redefine investment strategies for many. The sharp decline in Bitcoin's price can be traced back to a combination of geopolitical, macroeconomic, and market-specific factors. Recent escalations in tensions between the U.S. and Iran have triggered a wave of global risk aversion, significantly impacting various asset classes, including cryptocurrencies. Investors are increasingly cautious, leading to a sell-off as geopolitical uncertainties loom large. Additionally, there is growing anxiety regarding the U.S. job market, with mixed employment reports raising concerns about economic stability. Expectations of tighter monetary policy from the Federal Reserve have further placed pressure on risk assets, including Bitcoin. The Fed's potential interest rate hikes may deter investors from high-risk assets as they seek safer havens. This market turbulence has been compounded by forced liquidations, with over $2.5 billion in Bitcoin positions liquidated in a single day. These liquidations have created a cascading effect, further fueling the market's downward momentum and shaking investor confidence. Furthermore, the recent boom in crypto exchange-traded funds, which had been seen as a positive development for the market, faced a stark reality check as inflows stalled amidst the downturn. This stagnation has contributed to the overall instability of the cryptocurrency market, leading many to question the long-term viability of digital currencies in an increasingly regulated environment. The impact of this decline is significant. It not only affects individual investors, but also the broader crypto ecosystem, which relies on sustained interest and investment. Market analysts suggest that Bitcoin may experience a prolonged period of heightened volatility as participants navigate these complex dynamics. As regulatory scrutiny increases and economic indicators remain mixed, investors must prepare for a landscape where caution prevails. Looking ahead, Bitcoin's resilience will be tested, and strategic adaptation will be essential for those invested in the future of cryptocurrency. This price drop signals a significant shift in market sentiment from risk on to risk off, which is crucial for investors navigating the turbulent waters of cryptocurrency. Over the past few weeks, the cryptocurrency market has experienced unprecedented volatility, with the total market pain reaching a staggering $1.3 trillion. This dramatic decline has led many investors to hesitate as fears of further declines grip the market. The recent decline below $60,000 has prompted institutional buyers to retreat, indicating a lack of support at this critical level. Institutional investment is often seen as a stabilizing force in volatile markets. Their withdrawal raises concerns about the sustainability of current price levels. Current market conditions are perilous, with options expiry risks looming over the landscape. The upcoming expiry of over $10 billion in Bitcoin options could exacerbate the sell-off if prices do not stabilize. This situation creates a perfect storm for further declines, as traders may be forced to liquidate positions to cover losses, further intensifying the downward pressure. Additionally, MicroStrategy's funding model has come under scrutiny. Analysts are questioning their Bitcoin sale policy, which has introduced avoidable risks that could destabilize their holdings and impact the broader market. The scale of these losses, coupled with the shifting market dynamics, underscores the importance for both retail and institutional investors to closely monitor developments and adjust their strategies accordingly. Investors should be particularly aware of how macroeconomic factors, such as interest rates and inflation, can influence cryptocurrency prices. As traditional markets react to these economic indicators, the interconnectedness between them and the crypto space becomes increasingly significant. Looking ahead, the outlook remains uncertain. If prices do not stabilize soon, we could see a cascading effect on investor confidence, potentially leading to a prolonged downturn that could shake the foundations of the market. Conversely, if the market manages to find support and rally, it could signal a return of institutional interest and a shift back to risk-on sentiment. In this delicate balance, the next few weeks will be critical in determining the future trajectory of Bitcoin and the broader cryptocurrency market, making it imperative for investors to remain vigilant and responsive to the evolving situation. On July 19, 2026, Bitcoin experienced a dramatic 5.7% decline, dropping below the crucial $60,000 mark. This sell-off was not isolated, as Bitcoin Cash also fell by 4.8%, contributing to a broader market downturn that has sent shockwaves through the cryptocurrency community. Earlier in the week, Bitcoin had reached a high of approximately $73,000, making this sudden drop particularly alarming for investors who had anticipated a bullish trend. The cryptocurrency market as a whole has lost around $467.6 billion in value over less than a week, highlighting the volatile nature of digital currencies. This downturn can be traced back to several factors, including regulatory concerns and macroeconomic pressures. Recently, governments worldwide have intensified scrutiny on cryptocurrencies, introducing potential legislation that could significantly impact trading practices and market accessibility. Additionally, rising inflation rates and interest rate hikes have led to a more cautious investment climate, prompting many investors to liquidate their holdings to secure profits or minimize losses. The sell-off has been characterized by forced liquidations, which reached over $2.5 billion in just one day, indicating that many leveraged positions were unwound as prices fell. This event marks Bitcoin's lowest price point since November 2024, raising alarms among investors about potential further declines and igniting fears of a prolonged bear market. The impact of this decline extends beyond individual investors, affecting businesses that have integrated cryptocurrencies into their operations. Companies that accept Bitcoin as payment may face challenges in maintaining liquidity and profitability in light of these price fluctuations. Furthermore, the psychological effects on market sentiment cannot be underestimated. Fear and uncertainty often lead to more selling, creating a vicious cycle that can be hard to break. Looking ahead, the cryptocurrency market faces a critical juncture. Analysts suggest that Bitcoin will need to stabilize above the $60,000 mark to restore investor confidence and mitigate further selling pressure. If the downward trend continues, we may see a further exodus from the market, potentially leading to a reevaluation of digital assets as a viable investment class. Investors should brace for ongoing volatility as the market navigates these turbulent waters in the coming weeks, with close attention paid to regulatory developments and macroeconomic indicators. With Bitcoin now below $60,000, what do you think will happen next? Will it recover, or are we in for further declines? Share your predictions in the comments, and don't forget to subscribe for more daily deep dives.